Ladies and gentlemen, welcome to Woodburn Accountants and Advisors webinar series. The theme for this week's webinar is what research can you do in your pre-investment stage to secure your future China investment? Numerous clients approach me at the point of incorporation in China or at the point of already being established and realize that a lot of things have to be updated and changed. And it's purely because there was a lack of market research or a lack of research done in the pre-investment stage that could have changed all of these aspects that had to be updated. The whole point of this webinar series is to educate all of you that are at the stage of pre-investment into China, to guide you through the potential obstacles that could arise and what simple research you could do with a lawyer, with an advisor, with numerous partners to make sure that your investment is secure. Yesterday, we looked at the importance of establishing a business plan, researching what type of business scope would suit your needs, and how to create your Chinese company name. Today, we're going to be looking at how to create your China budget and how to decide on the right registered capital for your China investment. Before we begin today's presentation, though, I do just want to go through a couple of administration points. The first being your audio options for today's webinar. If you are based in mainland China or in any country that might have a great firewall and cause you to not have fantastic connection, please use a VPN. This will assist you to being able to stay on the line throughout the webinar session. If you do incur technical difficulties, or if I incur technical difficulties, please stay on the line. Within just a few short minutes, I will be back up and running to continue the webinar. Now, once you launched into the webinar system, you should have been prompted to choose what audio option you wanted, whether to use your computer audio, your computer's mics and speakers, or to telephone in and dial in. Obviously, the cheaper version is to use your computer audio. Otherwise, you're going to be incurring telephone minutes by using a landline or mobile. Here, you will see what you find when you click on the telephone option. You will have the number of the jurisdiction where you're based in, an access code, and an audio PIN. In addition, I will be having a 15 to 20 minute Q&A at the end of today's presentation. Please don't be shy. Use this opportunity today to ask any questions that you may have. Insert them into the questions section of the control panel. My priority will be questions that were asked already in the registration form. And if I don't get to your questions today, stay on the line. I will answer them in writing immediately after the recording has stopped. If you have to leave, then by all means, I'll be emailing you answers to your questions as well. So please do take the opportunity today to ask what you would like to ask. So let's test the system. If you would be so kind as clicking on the hand button in your control panel, that will at least allow me to know whether the majority of you can hear me and are listening in. If you can then click on the hand button once again, that will also allow me to know that you're continuing to listen to me. So let's begin today's session. Apologies that for those that attended yesterday, but for those that are newcomers, allow me to introduce who we are. Woodburn Accountants and Advisors is specialized in inbound investment to China and Hong Kong. We establish, manage, and administer companies in both jurisdictions to meet our clients' requirements. And let me emphasize, there is no client that is the same when going into the Chinese market. Our services include market entry advisory, cross-border investment, tax optimization, and corporate restructuring. All of our clients are international companies or entrepreneurs that are looking to invest in the Asian market, specifically into China and Hong Kong. Our clients are looking to manufacture in China, sell in China, source in China, or even provide services locally in China. Now, just a small disclaimer, This presentation today is a general view for everyone. And as I mentioned in my introduction, there is, or I have never had in 15 years, any client that was the same. So if you do have questions that are very specific to your needs and your business model, then don't hesitate to reach out to me. I am offering free consultations following this webinar series. A little bit about myself. My name is Christina Kohler Kalusha. I'm the head of business advisory at Woodburn Accountants and Advisors. Since 2003, I have been advising clients on their market entry and expansion needs within China. Rather than going into detail about, what I've done and who I've been working with, I think the most important aspect after saying that I've worked 15 years in the Chinese market is to give you an idea of what I've learned by establishing my own business and being successful in the market and staying in the market, more importantly. And these are three things that I think any individual that's relocating to China or any company that is going into China needs to understand. The first is have a great deal of patience. Quite frankly, learn to have patience. Going into the Chinese market is complex. There are tremendous cultural differences which lead to people being aggressive, non-understanding, and not adapting to the cultural needs in the market when it's in relation to personal needs or even company-related needs. So definitely learn to have patience. And it took me years to master this. But trust me, having patience will calm you down and give you a secure head in making decisions. The second point is learn to have an eye on detail. And the whole point of going through these webinar sessions and advising you on tips and what you need to look at is that you will see how much attention of detail you will need to go to when creating your business plan, when creating your budget, when finding your office, when hiring people. Learning to have an eye on detail will prevent you from making mistakes or missing out on the obvious mistakes that are in front of you. The third aspect is because China is complex, because there are cultural differences, you will encounter obstacles. There is no doubt in my mind you will encounter obstacles. My goal today is to try and avoid as many obstacles as possible, but you will incur some. The Western culture has the attitude of always trying to blame someone. This is really a waste of time in China, in a country that speed and efficiency is of utmost importance. Try to teach yourselves not to blame, but to find loopholes. Find ways around the obstacles that are occurring. And really, these are the three things that will help you and guide you as individuals working in the Chinese market. Now, the whole purpose for me in doing these webinars, it's really to inspire you, to inform you, to educate you on doing business in China successfully. I'm not creating these presentations to waste your time. I'm really trying to provide you with tips on how you can be successful and what you can do in the pre-investment stage of your market entry. So the agenda for today is ultimately, why is it important to create a budget, how to create a budget in China, and how to then check your actual numbers match with your budget. All right? So let's begin with the basics. Nobody who is an entrepreneur, a business owner, likes dealing with numbers. Nobody. Actually, most people want to avoid the numbers, besides really the financial controllers and the CFOs. So it's totally understandable that as a company going into the Chinese market, creating a budget can seem burdensome. It can seem like you're imposing constraints on a market that is humongous and huge and so much potential. But ultimately, if you don't create your budget, you won't be able to achieve your short-term goals, which ultimately will affect your long-term goals. Now, for me, the biggest importance in China about creating your budget is having the ability to plan. If you don't have the ability to plan, how do you know, first of all, where your money is coming from? How is it being used? Do you have capital for expansion? Do you have capital for investment opportunities? Are you able to make long-term commitments to suppliers and customers? Are you able to make long-term commitments to your staff that you're hiring in the Chinese market? If you don't have a budget, then potentially you can also lose existing business. Anything can happen. Like I said, any obstacles could occur. You have a manufacturing facility, power is turned off. Your shipment of goods is delayed. Your customers are not paying you. So many things that you are trying to foresee might not occur. The last is also, by not having your financial records in order, perhaps your investors won't be happy because they'll want to see reports potentially on a monthly basis. You may not be able to bid on government contracts because they may want to see your financial status. Investors will also want to see your financial status. You may not be able to purchase heavy equipment or machinery, particularly if you're in the manufacturing field. You may not even be able to purchase goods that you're looking to sell. Now, I just want to give you an example here of a client of mine that upon market entry made the most critical mistake. They didn't follow the timeline of their incorporation process. They were too enthusiastic. They were so excited. They released shipment from Europe heading to China prior to them actually having their business license. And the issue was that there was obstacles. The government was coming back constantly asking for further documentation. As a result, the goods arrived. They had to pay additional days of storage before the goods could be released. Once the goods could finally be released, they didn't have yet the general VAT taxpayer status, and this gets into a new topic about tax, where they could then offset the initial VAT paid upon the goods entering into China. They made a loss on that first shipment of approximately €500,000, completely cutting into their budget for their China business. All of these things need to be taken into consideration, and it all follows from the business plan aspect, timeline, budgeting, etc. So it's very, very critical to have a budget, follow that budget, but then also follow your advisors and lawyers in terms of timelines and experiences in regards to shipping goods and dealing with transactions locally. Now, I've highlighted here what I foresee to be critical benefits, especially in China, for your first year of operation to create that budget. The first point really is critical, and we'll go into detail about registered capital later on in today's presentation. But a budget is really a way of being intentional about the way you spend and save your money. It is openly said by finance people around the world that with budgeting, you control your money. The money does not control you. And that's a key aspect that you have to remember. By creating the budget, you are in control of your funds. You know what's coming in, you know how it's going to be used. You know what you need to save, and you know what you can spend. You've also got to keep your focus on your investment goals. You've got to avoid spending unnecessarily on items and services that don't contribute to attaining your financial goals. If you don't have a budget in place and you know every single line item of your expenditures and what you're planning on doing for marketing and business development, that's your guideline of what you're permitted to spend. All right? And you need to keep a focus on that. Budgeting obviously makes you aware of what is going on with your money. It's clear. When is the money coming in? How fast is it going out? Where is it going? It enables you to know what you can afford, take advantage of buying and investing opportunities, and plan how to lower your debt. And ultimately, it helps you in terms of how far you are towards reaching your financial goals. It helps you organize your spending and your savings by dividing your money into categories of expenditures and savings. You may initially, if you're an entrepreneur, not want to have such a detailed charts of accounts. You don't really need to have line item by line item being so detailed. I usually recommend you being detailed from the get-go. But this is different from business to business. And I'll explain why I recommend that later on. But if you aren't organized, you're not going to be efficient in the Chinese market. And when anything has to do with accounting and tax in China, it's all about paperwork. It's an old-fashioned system. It's all related to having the papers in front of you, having the files kept in your office. By law, you need to keep all records in your office for a minimum of 5 years. So you need to be detailed. You need to be organized. It makes you decide in advance how your money will work for you. It enables you to save for expected and unexpected costs, which is extremely critical in the Chinese market because, as I mentioned earlier, obstacles will arise. So you always want to have wiggle room within your budget for these emergencies. It enables you to communicate with your investors. If you are looking to obtain investors, whether Chinese investors or foreign investors, well, first of all, they're going to request you to show them a budget. They're going to request to see a projection plan. They're going to see a financial action plan as well. In theory, a budget should also help you in terms of finding any early warning signs of potential problems. It helps you determine if you can take on debt and how much debt. And ultimately, it enables you to produce extra money. Now, the first point that I highlighted here was it gives you control over your registered capital. And that's step one. When you incorporate your company in China, one of the first things that you need to provide to the government within your articles of association is how much money are you going to invest? So let's look at what registered capital actually means. There are two numbers you need to provide. One is the total investment amount, and the second is the registered capital amount. The total investment reflects the total capital required to develop and run the company. The registered capital, and this means in the long term, the registered capital is the capital amount you need in the short term in the startup phase of your business until you are positive cash flow, until you have positive cash flow. So it's really, you have to calculate what is my startup phase. So you've got to make projections. Potentially for me, actually, I always think that a startup phase in China is between 3 to 5 years. So you may want to do a projection plan of 3 to 5 years. Understand how much capital you need in those 3 to 5 years until you become or have a positive cash flow status. In 2014, the Chinese government revoked any type of minimum capital requirements in China, ultimately forcing companies and entrepreneurs to create budgets, to know how much capital do they need to bring in to start up their business. And you've got to remember, I'm going to word this in a different way so that maybe some of you can comprehend it a little bit better. Registered capital is the capital you are going to use to pay off your expenses in China. Pay off rent, pay off salaries, buy goods. Right? This is money you will use to pay for all of these things. You've got to keep in mind that there is no time limit to bring in the registered capital. So, if you decide that the term of validity of your company is 20 years, you have 20 years to bring it in. Okay? There's no minimum amount that has to come in at any point. Obviously, once your bank account is opened, everyone is under the assumption that's the point where operations begin and some capital will be remitted. You can always increase your registered capital amount. You can also decrease it, but it's extremely difficult to go through that application to decrease. Anytime you want to increase capital, it takes approximately 8 to 12 weeks to complete the application. Which is why If from one day to the next you have no more money in your bank account, you can't pay salaries, you can't pay rent, it will take you approximately 3 months to get money into your account. Hence why it is so critical to know what is the right registered capital amount for your business. And I just highlighted the first point on this new slide. It's so important to make a projection, a budget of how much cash you need to start up your business, maintain your business until revenue starts trickling in. You need to invest sufficient funds so that at no point in your business are you halted, where you can't do anything. You're stuck. You're waiting for 3 months to get money in. I have way too many clients. I mean, you have no idea. Probably around 99% of my clients that don't create budgets. So when I ask them, how much capital do you want to invest? Well, how much capital should I? I honestly, as an advisor, hate that question because it means you are not prepared about going into the Chinese market. You don't even know how much money you need to get your business up and running. And that scares me as an advisor, to incorporate your company when you don't even know how much capital is necessary to build up your business. Everyone wants to minimize their capital investment, and rightly so. The biggest disadvantage about the concept of registered capital is that it is your liability in China. So if you would be sued, if you would go bankrupt, you are liable up to your registered capital amount. So yeah, it is a conflicting situation. You've got, devil's advocates here. You've got one side, the devil saying, don't put in so much money. It's your liability. We don't know if we're going to be successful in China. Maybe something bad will happen and then we're liable up to that amount. But then you've got the angel telling you, in order to be successful, we need the capital to make sure we grow and sustain ourselves. So you've got to make a balance between these two sides and know what fits your business model, what fits your growth and expansion. Now, another thing that's extremely critical, and again, I'll be going into much more detail later on, is I have also a lot of clients that don't do the research in terms of how much things cost in China. They don't reach out to suppliers to get quotes and estimates. They don't do any of this type of research, so that when they create their budget, they're creating numbers out of thin air. And operating in tier 1 cities of China, Beijing, particularly Shanghai, which has the highest standard of living, things aren't cheap. Office rents are going up. Salaries are going up. Just simple office cost is going up. And people aren't taking this into consideration. And I will be guiding you in this process today in terms of what you need to consider for each of these expense line items. Another critical aspect about registered capital is the fact that if you transfer, remit, more capital than you have indicated in your articles of association, that additional capital will be considered as income and subjected to tax. So you always want to remit the exact amount that you indicated in your articles of association and not go a cent higher. Now, it's also important because there may be some companies here online today that are looking to establish a representative office. And I do want to make a difference or an understanding of a representative office versus an LLC. A representative office does not have any registered capital requirements. Basically, the representative office is a liaison office and it is a cost center, meaning that you telephone the head office, you say, guys, I need money to be transferred. These are my expenses for this month. Please transfer this amount so I can then distribute the funds locally. The issue with representative offices is that for whatever is transferred from the parent company to the rep office is immediately taxable. And it's approximately 10% on the total expenses. All right? A limited liability company, whether that be a WOFI, a FICE, a a joint venture. These are all LLCs. You have the initial capitalization. This is your registered capital. This is money that is going from the shareholder to your Chinese company's bank account. There are no tax liabilities. It is your startup capital that you are going to be using to pay off your expenses. All right? As soon as money trickles in as revenue, then at that point, you are declaring profits tax. Okay? And an LLC's expenditures, if they exceed a certain threshold, definitely are more tax efficient than a rep office. So, you know, tax is usually a big aspect in people's mind as to whether to take the representative office route or to take the LLC route. At a certain point, you may find the LLC route, you know, more tax efficient. So let me offer you some tips, well, at least my tips, for calculating your registered capital amounts. The COC and the Tax Bureau, they like, and as you can see, I put this in quotation marks, they like to see companies that have registered capitals of more than 1 million renminbi. All right, this is what they like. Nobody is going to request to see a feasibility study or a business plan. No government bureau will request that. No one is going to request to see your budget. You need to create that for yourself. All right? And my biggest tip is ultimately calculate how much capital you need during your startup phase. And if you have that capital on hand, make that your registered capital. You've got to look, however, at your own circumstances. If you have the 1 million renminbi to invest, then invest that. But if your company needs more than 1 million renminbi in your startup phase, invest that higher amount. If you are a single entrepreneur, you're investing your own money, you may not have 1 million renminbi. It's also okay. You're not going to get rejected during the application stage of your incorporation. I'm only telling you what the government bureaus like to see. All right? It also doesn't mean that your application is going to go at the bottom of the pile. It might just mean that more questions are raised during the application procedure. The question you have to ask yourself is, how much do you need before you're cash flow positive? Is it 10,000 renminbi? Is it 100,000 renminbi? Is it 1 million renminbi? Is it 5 million renminbi? I can't answer that for you. That's something that you have to do and create your own budget. Now, I would say about 70% of my clients have all run out of funds at some point in their startup phase in China. 70% have called me and said, whoops, I know you warned me. I know my bank account was low. I didn't have time to track it. Now I'm out of funds. How do I get funds in? The quickest way to get funds in is by remitting your foreign debt. So as I mentioned earlier, you have your total investment, which is the total projected amount of funds that you need for the lifeline of your business. This includes not only your startup capital, but may also include your expansion plans, etc. And then you have your registered capital amount, which is purely for your startup phase. The difference between those two figures is what's called your foreign debt. And by simply drawing up a loan agreement, you can remit these funds. Okay, that's probably the fastest way to get money into the account if you are at zero in the account. The second option is, if you've already used your foreign debt loan, increase your registered capital amount. But as I mentioned, this is a 3-month application phase, 8 to 12 weeks it takes to get finally money into your account. So, you know, if you're at day 0 and then tomorrow you tell me, yes, increase my registered capital amount, you're going to wait 3 months and your business is halted. The third alternative, which is not something I would necessarily recommend doing in your startup phase, is creating service agreements between your shareholding company and your China company regarding licensing fees, royalty fees, marketing fees, any type of fees. There has to be some truth behind these service agreements because the Tax Bureau may question the validity of these service agreements. and then you are able to receive funds. But this is not registered capital, so it's not going to be tax-free. This is going to be revenue that is generated in your Chinese company, and taxes will be imposed. So now you've got the expense of taxes, which maybe you don't have the fortune to actually spend. You don't have the money available. So the third is really the last option, right? You don't want to incur taxes if you don't have to. This is all to show you that you do have options. Okay? If you can't get the registered capital done perfectly, you do have options to increase, use your foreign debt loan, or create these service agreements. What I'm trying to highlight here is this should really be your last resort. You should have your registered capital finely tuned according to your business plan, the opportunities for investment, and the actual capital you need in your startup phase. So how are we going to create your budget in China? What do you need to look at? All right, the first is you need to project your cash flow. You've got a cash budget. You should be doing this on a month-to-month basis. You should be projecting on a month-to-month basis how much cash you're going to be spending. And particularly for those entrepreneurs where cash is going to be, you're not going to want to spend too much of it. Having a projected cash flow will guide you tremendously if you really are a small or entrepreneurial business. Costs. Now, costs is really something that you can research from the get-go. And I can't even explain to you how many companies don't do this type of research. There are three main types of costs. There are fixed costs, variable costs, one-off capital costs. Now, for those of you that are CFOs or finance people on this webinar session, you may think, well, this is all basic and very common sense. But as I mentioned, for those of you that are business owners, numbers may not be your forte. So I want to explain to you in detail how to create your budget and what you should be looking out for. Then you should be projecting revenue, right? Sales or revenue forecasts. And this is extremely difficult. I find this an extremely difficult tactic, especially if you're in the service industry and, you have to go by gut feeling if a client is going to work with you or not. The first thing that you should look at is your sales history. Now, most companies that I have met with have done business in China without actually physically having an entity there. So, use that sales history from your shareholding company or from your sister subsidiaries to know what is already being generated by not having a company in China. Okay? Use that as your baseline. If you've never done business in China and you realize you need to have an entity in China in order to start growing business, then it's a gut feeling. You've got to see what type of marketing strategies you're going to be doing and what that might bring in. And it's, like I mentioned, that's just using your gut in putting numbers down. So remember, projected cash flow, costs, and revenues. Now, creating, monitoring, and managing a budget is really the key to success in China. And as I mentioned, nobody wants to look at budgets. Everyone wants to look at client lists, what's coming up in revenue. No one wants to look at the details. But, making your budget, monitoring that budget, managing that budget will really help you to allocate resources where they're needed. It will help you to determine if you need to lower your costs, for example, and it will help you to remain profitable and successful. And it doesn't have to be complicated. You simply need to work out what you're likely to earn and what you're likely to spend during the budget period. So I've listed here a couple of questions you should be asking yourselves. What are the projected sales for the budgeted period, right? That's the first line item, sales, revenue. You got to be careful though. You don't want to be too enthusiastic. As I highlighted in yesterday's topic about business plans, you don't want to be enthusiastic. You don't want to overestimate. You don't want to seem like this business is going to boom. As I mentioned, obstacles in China will arise. I'm going to try and help you prevent as many as possible, but they will come. A lot of things cannot be foreseen, like, for example, customers not paying you. all right? So don't be too enthusiastic when creating your projected sales. What are your direct costs of sales? Okay, if you're in trading or manufacturing, you're going to want to look at cost of materials, components, subcontractors. If you're in the service sector, you're going to want to look at hours of consulting that are applied to certain projects. What you do have control over, because you can research this prior to your investing, is what are going to be your fixed costs and your overheads. And really, this is where I can help you today. I've listed here some of the key points that should be in your charts of accounts and in your budget for the Chinese market. All right, and what you should be looking at within each of these line items. So the first is cost of premises, okay? You want to include rent. You want to include management fees. You want to include municipal taxes, so VAT, for example, and surtax. All of these items you want to include. And all you have to do is contact a real estate agent to give you a guideline of fees in the city that you want to locate in. It's not complicated. Contact a variety of real estate companies. Understand the difference between starting off in a business center, how much that costs, versus starting off in a real office space. Do you need retail facilities? Understand how much that costs. This can all be done by talking to real estate agents. The next is staff costs. Now, most people, when they create their budget, they forget two things when they're accounting for staff costs. Obviously, you've got gross salaries, gross salary amounts. Let me clarify what a gross salary amount is. A gross salary in China is the amount that the company is going to pay, but does not include social insurance. Social insurance is something that will be paid on top of the gross salary amount. And as you can imagine, because it's something that's paid on top, companies don't include social insurance into their budgets. And in a city like Shanghai, where if you are earning, I believe it's around 14 or 15,000 renminbi or more, then social insurance, you're looking at least 8,000 renminbi on top per month. Sorry, 8,000 renminbi per month. So this is a tremendous aspect to your budget. And I can tell you straightforward, companies don't include this. They forget to, because it's something that's outside of their norm. Don't forget to include allowances. If you are repatriating or seconding expats to China, are they going to have housing allowances, school fees? Again, these are all things that can be easily found out through real estate agents, school fees from schools. Again, not complicated. And by doing this research, you also have then leverage to negotiate with staff. By just doing this simple research, what are social insurance amounts? If we're going to provide certain allowances, how much would they cost? All right? Keep this all in mind. It's not difficult. Talk to HR companies that might be doing your recruitment so that they can help you and guide you with formulating salary packages. Utilities. Now, this isn't this might be a little bit more complex, but again, real estate agents, if they're going to be helping you find their properties, they will be able to help you and guide you with monthly electricity amounts, roughly a monthly telephone bill, and broadband bills. Printing, postage, and stationery, okay, these, just calculate a certain amount depending on the number of staff that you're going to have in your office. If you're planning on providing cars to your employees, you will have vehicle expenses. Or if you are a manufacturing facility or trading company and you want to purchase your own trucks or rent your own trucks, these are all things that have to be negotiated with the suppliers to talk about how much they're going to cost. If you want to buy equipment, or if you want to send equipment from the shareholding company to China, talk to your freight forwarder. Understand how much all of this is going to cost. Talk to your freight forwarder about customs duty. Is it going to apply to you? How much is it going to cost? Advertising and promotion is also critical. All right? Advertising and promotion is looking at all types of marketing campaigns that you are going to be doing. And if you're going to be using a marketing company, branding company, public relations company, these companies will give you their fees, and they, will guide you with how much the campaigns are going to cost you. All right. So again, talk to your future suppliers. Vet your future suppliers. Travel and subsistence expenses. This is all about your HR department creating policies for your staff in terms of how much they can spend when they travel. Most of the time, my clients use their own policies in their home jurisdictions and use it in China, particularly if you're locating in the tier 1 cities, because it is expensive. A cup of coffee in Shanghai is pretty much the same price as a cup of coffee in London. No joke around it. And then obviously look at the legal professional costs. So insurance fees, legal fees, accounting fees, trademark applications. These all need to be included. HR services, public relations firms, marketing firms, etc. You got to calculate all of these things inside as well. It is not a difficult exercise. Calculating your fixed costs and your overheads is something you all have control over. It's not something you should fear. It's all a matter of reaching out to suppliers and asking for quotations and estimates. All right? So creating fixed costs and overheads is really not the dilemma. Revenue, yes, I can completely understand that. But, fixed costs and overheads should not be. Now, what to do when you've created your budget? Well, hopefully now I've convinced you all how important it is to create your budget. But, we're looking again at what's the need for it. What's it going to bring you down the line? So if you base your budget on your business plan, and this is how yesterday's webinar and today's webinar tie in together. First step, create your business plan. Second step, within that business plan, create your budget. Finally, you will be able to create a financial action plan. And this can serve you in several useful functions, particularly if you review your budgets regularly as part of your annual planning cycle. So your budget can serve as an indicator of the costs and revenues linked to each of your activities. It's a way of providing information, supporting management decisions throughout the year. It's a means of monitoring and controlling your business, particularly if you analyze the differences between your actual and budgeted income. Creating the budget also allows you to benchmark performance. And this is also why I've highlighted why I believe it's important from year 1 to be so detailed with your charts of accounts. Year 1, you may be, more focused on marketing and business development initiatives. Year 2, sales will start trickling in, revenue will start trickling in. And you may be then spending more money on marketing and advertising promotions. But if you're not able from day 1 of your market entry to be able to compare year on year, month on month, you won't be able to make decisions. Okay, and this is why I say create your charts of accounts to be so detailed so that already from year 2, you can compare figures. You can see. It will provide you with so much insight in terms of what have you done wrong in year 1 and what can you do better in year 2. And then obviously it will help you to create key performance indicators. And these are to boost your business's performance. You need to understand and monitor the key drivers of your business. A driver is something that has a major impact on your business. So from my perspective, the 3 drivers are sales, costs, and working capital. All right. So the next aspect is you've created your budget. You've been, good. I'm proud of you. You've created your budget. You've gone into as much detail as you possibly can. You've done your research. You've added in a little bit of wiggle room. You've not been too enthusiastic. You're being a little bit conservative. Now you're starting your business. You are at day 1 of your China incorporation. Your China company is now incorporated. Registered capital has flown into the company. You are permitted now to spend. Now in China, you need to know a little bit about the counting system. Taxes need to be paid or declared on a monthly basis. Value-added taxes have to be paid and declared monthly. Profits tax needs to be paid and declared quarterly. This all forces you, I mean, from my perspective, I love it because it forces you to create monthly financial statements so that you have no excuse to compare your budget against your actuals on a month-to-month basis. The Chinese government is making this so easy for you because you're forced to do so many things. 95% of my clients, whenever I send financial management reports and a request to have a call to discuss them so that we can compare budgets to actuals, they decline, which always frustrates me because the fiscal year in China is January to December. And I know come January 10, I'm going to have every single client come to me saying, I've reviewed the annual financial management reports. There are numerous adjustments that have to be made. Numerous things have to be changed. And it's because the people that are responsible of looking at the financial management reports put it to the side because they know the company is in a startup phase and they don't check things and they don't make adjustments when the adjustments have to be made, and then comes chaos. And in some instances, it's already too late to make adjustments. So I hope that's something to really convince you about the importance of creating the budget and looking at the actuals month to month. You have to be effective with them. By looking at the actual numbers and matching them with the budget, you can analyze reasons for any shortfall. You can consider reasons for a particularly high turnover. You can compare timings of your income with your projects, right? And checking that they fit according to the budget. So, you really have to look at this carefully. You also have to look at your actual expenditure month to month. And I think this is one of probably the biggest mistakes that companies make, is that without realizing it, they are so enthusiastic about being in the Chinese market. Any opportunity that arises in their face, they take it without looking at their budget and seeing how much money they can actually spend. So actually what you'll find is that in year one, they've overspent. Hence why there is no more registered capital left in the bank account. So if you don't look at it from month to month, issues will arise. And you won't know how much money is left in your account. And you won't know if you can actually spend money that's not there. All right? Now, where I highlighted previously the benefits of creating a budget for your year one in China, I want to highlight, because I think this is so important, what are the benefits of also continuing to do a budget for year 2, year 3, year 4, year 5 of your China business? So the first one is obviously know where you want to end up. And I highlighted this yesterday. The business plan highlights what your goals are. The budget will also highlight what your goals are, but it will also highlight what you are allowed to spend for year 2. How much did you spend in year 1, and what are you permitted then to spend in year 2? But create those goals. And again, like I mentioned yesterday, business plans and budgets are flexible pieces of documents. They can consistently be amended. Now you're in year 2, you will have staff on the ground. And I think the biggest thing that companies do in China is that they underestimate the value of their staff. Involve your team with creating the budget. All right? Maybe you even want to divide the budget so that each team creates a budget for their own department. But involve your team and listen to them. Listen to their comments. Listen to what they are telling you. They are the ones that are physically operating and building your business. Listen to them. Make sure you make them feel like you're listening, that you understand what they're saying. In the role of being the manager in China, what you really should be doing more than looking at everything else is acting as a scenario planner, predicting economic circumstances, and and using your time to adapt your forecast, adapt your budgets, adapt your business plan in case any obstacles arise. All right. Think of the unpredictable, and that will guide you with then being very adept and flexible at changing things at the spur of the moment. Ultimately, though, you want to always keep a separate strategy. You know, you always want to have your main strategy, your main focus, but you also want to have strategies in case of. What if this happens? We have to change the strategy to that. So really point 3 and 4 kind of come together. Point 5 is account for everything and account for more than what you plan to spend. When budgeting and forecasting, it's all too common that people miss out the important details, especially when they're crunched for time and they're not taking time to create their budgets. Every expense, every variable has to be taken into consideration. Maintain extremely organized records of expenditure, of revenue. Really, put every single detail inside. I mean, how much you spend on stationery, everything should be included. It also helps you to then compare year on year, because as you grow your business, you'll be starting to spend things that are different from year one, and you'll want to make that comparison. You might be extremely surprised in China to find out how the little things can really add up over time. All right? You know, I spend $10 here on folders. Next month, I've got more staff. I'm now spending $50. You know, you'll have your HR person suddenly putting in claims for $100 or 100 renminbi when it should actually only be 10 because they're overspending. Take account of everything. Make trade-offs where appropriate. So sometimes you'll run into situations where you will find an opportunity suddenly that you didn't budget for. Now you've got to look at your budget. You've got to see how much money you can spend, and you've got to make trade-offs. If you think this opportunity, if you miss it, it's going to truly affect your business and it's going to be so devastating, then take that opportunity, but then take something off of your budget. Make these types of trade-offs. This will, however, require you to look at your budget and know what you've budgeted for. Keep profit flow and cash flow targets. Always forecast and reforecast. As I mentioned earlier, when you're creating your fixed costs and your variable costs, always comparison shop. This is the point where you can do your own research, find multiple suppliers, find out their prices. China is known for bargaining. Don't accept the first price that comes down your door. Negotiate, okay? And last but not least, use the right tools. And what I mean by this is the following. Decide. Are you going to have your own internal finance team? Are you going to hire somebody to manage your finance? Please don't hire a junior person to help you start up your business. You need somebody who has extremely good experience dealing with tax bureaus, having an understanding of complex transactions, and knowing exactly how to book things for a foreign invested enterprise in China. I've seen too many companies go the cheap route, hire a junior accountant because things aren't complex, but this person can't advise you. They don't have the experience. So use the right tools. If you want to build your own in-house team, hire someone experienced. Otherwise, outsource. Can't even tell you how many thousands of accounting firms there are in China, whether local, mid-tier, or the big four. Tremendous quantities to choose from. Find the right model that you want to use. Decide also if you want to have your own accounting software system in China, or you want to outsource that to then an external provider. Make those decisions, but make sure you place a focus on your developing your finance team so that you have things right from the get-go. Now, I've listed here for your ease and kind of to start you off in terms of building up questions when you've hit year 2 of your China budgeting journey. So these are questions that you should think about when formulating your budget for year 2. Will you keep prices the same? Will you lower them? Will you raise them? How has year 1 reflected your decision for year 2? Do you plan on introducing new products into the market? Do you plan on exiting products from the market? Will you target new customers? Are you going to have new sales strategies? Are you going to have new marketing campaigns, different marketing campaigns? Will your cost of goods or services change? Will your suppliers, all the variety of suppliers, will they increase their fees from one fiscal year to another? And if they will, by how much? And will that affect then your costs? Will you hire more staff? What does your headcount look like? You need to project. Are you going to hire more staff? Do your staff need training, either locally in China, or do they need to be sent abroad to your head office? And are you planning any other special projects or initiatives? So for those that didn't participate in yesterday's webinar, I'm going to kind of re-emphasize things again that I mentioned yesterday, because whether it's a business plan or whether it's a budget, these things all come into play. Don't rush yourself. Business budget cannot be thrown together haphazardly in a few hours, especially if you want to reach out to multiple suppliers in China to get estimates and quotes. All right? Do it right. Take the time to partner with your team, align the budget, talk to your investors, and create a budget, even if it takes longer than you like. I've highlighted it throughout this presentation. Enthusiasm is great, but not when results disappoint. So always create some form of wiggle room within your budget to protect yourself for any obstacles or problems that arise. When you create your budget, remember that the fiscal year in China is January to December. So when you're incorporating your company, kind of analyze at what point your bank account will be opened so that you know when registered capital has to be remitted. At that point of the bank account opening, everything in terms of accounting and tax will start. So if you started your incorporation in February, you're probably looking at October, where things will start, if you're basically a consulting company, where capital can be remitted. So you're looking at only 3 months of a projected plan for 2018. Then you're looking at year 1, I guess, of 2019. Follow the fiscal year. That will help you with your budget. When you want to create year 2, always start or try to start start at the latest in October, so that really by January 1st, you have an approved budget to start off the year, and you've had time to explain to your teams what the budget is, how they're allowed to spend their money, what is expected in terms of revenue. You're basically creating for them the goals and objectives for the following year so that January 1st, things can begin. Whether you're creating your business plan or creating your budget, the biggest mistake is to create it, say, voila, I'm done, I've done it, putting it in a drawer and never looking at it again. Please look at it, both documents, on a month-to-month basis. All right? And remember, circumstances and obstacles will arise, so budgets should be edited. They are flexible pieces of documents. What you've put in as a number today might not be the actual number in 4 months because certain things have changed. July of every year, social insurance rates go up for staff. So you already have an idea that if your business is going to start in October, what I've budgeted in February will be very different in October for staff. And this all involves talking to people. Will there be changes? So I want to highlight, and I do this at the end of each of my webinars, kind of key words summing up today's presentation. So from yesterday's webinar, create a business plan. That's of utmost importance. Create a budget. You want your budget to be simple. You don't want it to be complex. But at the same time, you do want it to be as detailed as possible. Okay? Have people build your network of suppliers so that they can aid you in creating the numbers that need to be put inside the budget. Okay, this is how things will become simple for you. You want your budget to also provide you with flexibility and freedom, okay? Which is why you want to update your budget consistently when things occur, when things go well, when things go bad, etc. All right? You want to be able in your budget to see any opportunity that will arise and whether you can spend money on that opportunity. And I always say this, I mean, knowledge is power. The more you talk to people, to suppliers, maybe even to competitors if you're benchmarking properly, knowledge is power, and this is what guides you to creating your business plan and creating your budget. Talk to people. People love sharing their experiences in the Chinese market. And most importantly, you cannot update your business plan, you cannot update your budget if you don't watch your investment. If you have an investor, they will force you to watch your investment and make amendments. But if you don't have someone backing you up and pushing you, do it yourself. Watch your investment. Don't be slack on this. Make sure you do checks on a month-to-month basis. So let's begin today's presentation. I've already run out of time. I truly apologize that. There have been questions that were filled in on the registration form, and I want to start them. We will end this in approximately 10 minutes. So if you do have time, stay on the line. One of the questions that came in is, when we budget for our China investment, should we only budget for year 1 or longer? As I've highlighted throughout this presentation, for me, when a company is going into the Chinese market, I estimate that their startup phase will be between 3 to 5 years. So ultimately, in the best case scenario, you want your registered capital to encompass that 3 to 5 year time frame. So you do have to do a projection over 3 to 5 years. But again, it all comes down to you, whether you have the capital readily available, whether you don't have the capital readily available. And I highlighted tips in today's presentation on what you should be looking at. The second question is, in your experience, what have you seen as the most common errors in terms of budgeting? The most common error is not continuously looking at your budget, and after a year, realizing that you have overspent, realizing that you have outsourced for too long, meaning that the fees of your outsourced provider outweigh building something in-house. You're undercharging customers, and you're not keeping control, and you're not asking questions of your team. You're not listening to them. For me, those are really the most common mistakes that occur. Another question that's come in is, what currency should we remit or designate as our registered capital? That's a very good question. So currently, you can designate it as any currency you wish, but you've got to make sure that you don't change your mind. So you can choose to remit in US dollar, in Hong Kong dollar, in euro, in renminbi, but you need to do all of that conversion then in your shareholding company so that you're physically remitting renminbi, and when it arrives in the account in China, it is renminbi if you've said it would be renminbi. That money has to arrive in your bank account in China in the currency that you've designated. And it's completely up to you what you decide it to be. This is an interesting question. I'm an entrepreneur investing myself in the business. Can I book my personal expenses into the company? So yes, you can. I, however, would not recommend that. And I say this because you want to be able to do a benchmarking comparison year on year. If you grow your business and after 5 years, you're at a point that's great, you've got 50 employees, revenue is trickling in, at that point, you'll probably say, well, you know what, I'm giving myself a nice salary anyway, I need to take my personal expenses out. And all of a sudden, you're not able to compare anymore. So if you are an entrepreneur or a startup that's looking to go into the Chinese market, eliminate booking personal expenses into the company accounts. Just give yourself a salary and book yourself as an employee of the company, receiving a salary that will sustain then your personal expenses in the Chinese market. All right, I'm going to leave it there because I do see people trickling out. And if you have asked questions that I haven't answered yet, I will get to you immediately as soon as the recording stops. I do offer free consultations, so if you do have any specific questions or needs, please feel free to reach out to me, either through info@woodburnglobal.com or Christina@woodburnglobal.com. And we give out free resources. So, our webinars are complimentary. We have online publications that are actually published weekly. If you're interested in receiving all of these types of free resources, subscribe by going on our website, and you will get updates about all of the events, business trips that are occurring globally, and free webinars that are up and coming. If you also want to follow me or follow the company through the various social media platforms, don't hesitate to do so. The recording of today's presentation will be uploaded to YouTube later on today, so you will be able to see the recording as well. And the physical presentation will be distributed by the end of the week. I would really like to thank everyone for joining in today's presentation. If you would like to join tomorrow's, it's about being smart in terms of choosing your registered office address. And on Thursday, we're talking about how to employ people, how to find candidates, and what you need to consider when drafting employment contracts or drafting or creating salary packages. So do register to those if you haven't thus far. Thank you all for staying over time. I truly appreciate that. I hope you enjoyed today's presentation. And I look forward to seeing you all again very soon. So thank you and goodbye.